Well, ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is September 15th, 2014. I'm going to take a look at the Euro Sterling, a potential for a wild ride in trading this week as a result of some pretty important fundamental news that will be coming out. Also, there's some neat technical levels or key technical levels that the market's going to be paying attention. So let's take a look at some of the fundamental impact first. The Scotland referendum will take place on Thursday, and what we know is that if it's a yes vote, that would be more bearish for the pound sterling. We'd expect that the euro sterling, as a result, would move to the upside, with the euro going higher, the pound going lower. A yes vote means that Scotland will form their own nation, brings about all sorts of uncertainties as far as what happens in that transition, and so that would be and is thought to be negative for the pound. A no vote would be bullish for the pound for the opposite reasons. The status quo would remain the same, and all the discounting of a yes vote would, or some of it, would be taken out of the market, and the market would be expecting a higher pound or a lower euro sterling as a result, all things being equal. Now, the all things being equal are the other fundamental influences that go into the big old black cauldron that determines the value of a currency pair like the euro sterling. And some fundamental influences that are going to be in addition to the Scotland referendum this week include the zoo economic sentiment coming out of Germany and the EU. That'll take place on Tuesday. We have the final CPI for the EU coming out on Wednesday, and that TLTRO program, which was announced in June by the ECB, will kick off on Thursday as well. We'll understand what allotment will be going to the member banks within the EU, and the amount of funds that get pushed into these banks will also have an influence on the value of the euro in particular, could send it to the upside or to the downside. So those are the fundamental influences, with the number one being the Scotland referendum, likely to have the biggest impact on the euro sterling. Now let's take a look at the technicals that will shape the currency pair this week and give us clues as far as the bias from really the fundamental news that comes out. And what I mean by that is that traders will use technical levels to help define the risk and limit their risk, and also to help determine the bias, either bullish or bearish. Now, we know that the price of the euro sterling ended the week somewhere around the 79.66 level. In last week's trading, the high price reached a high of 80.65. Now, when we reached that high price of 80.65, we were banging against the resistance area up here near the 38.2% retracement. This 38.2 is of the year's trading range, the high for the year to the low for the year, and the market decided to sell against that level. That is, we found traders who would sell against that level with likely a stop above. A level that might have been a stop level might have been this 81 level, because we found buyers here over these days going back to the month of May. 1, 2, 3, 4, 5 days where the market found support against that 81 level. And so not only do we have this 38.2, we had the 81 level. Stops above that 81 were probably likely. Sellers came in early, stop above the 81, didn't go above that level and move back lower, and they benefited from that trade. That's what technical trading is all about, defining a risk and limiting your risk against a level that you think the other traders are looking at, and if it works, you're golden, all right? Another thing that occurred last week, you see this blue line right here, that represents the 100-day moving average. And before we broke to the upside, where were we finding resistance against that blue line? What else was at that high? These highs going back to the month of July or August. And so we had, and actually going back to this month in June. So we had highs in June, we had highs in August, we had the 100-day moving average right there, and we found sellers against that level. Are you surprised that we saw this spike to the upside when the market broke above that level? Not. But the sellers against this level turned into buyers here as their stops were triggered. We went to the next target level up here, and the market found sellers against that level. And when we moved back below what was once resistance here, we broke above the ceiling and then came down back below the ceiling, the market sold off. And so these technical levels are important. They're important, and they're going to be important in this week's trading. especially to the upside here, or those are very clear to me to the upside. So in this week's trading, if the pound or the cable gets weaker, okay, so the pound gets weaker, and we see the euro moving higher, the euro sterling moving to the upside, what do we need to get above in order to push this market higher and stay above? We need to get above the 200-day moving average at 80.18. We need to get above this high ceiling right here at 80.34, and then we need to get above the 38.2% retracement level, along with the highs that we saw going back here to the month of May. So we need to get above the 73 to 81 level, and if we get above those levels, then we start to move higher. We start to break even more to the upside. The next target would be the 50% retracement of the year's trading range. And then we look at the 200-day moving average at 81.53.8. When was the last time the price traded above the 200-day moving average for the euro sterling? You have to go all the way back to October of 2013. So nearly a year ago, 11 months ago, was the last time the market traded above the 200-day moving average. Significant level up here. It also corresponds with this low right here and these highs right here. So this is a key area right here that the market will likely find some resistance. So we've mapped out our way to the top side here. 200, old high, 38.2, and old lows, 50%, 200-day moving average, and old highs and lows through here. That's on the top side. Now on the downside, as long as the price remains below the 100-day moving average, this blue line right here, then we're going to just be looking for our lows that we saw for this month, or that's where we'd be targeting, moving to our lows for the month. That level came in at the 79.89 level. Let's call it 79.90, and then the 78. I'm sorry, this is 78.90, okay, 78.90, and then we have the low for the year, which came in at 78.72. In between that level, I have a horizontal line coming across here. This was the low where we broke below the bottom side trend line here, the channel trend line, found support here, consolidated to the upside, came up to our highs right here, which formed the ceiling right here, and then rotated back below. So watch this 79.57 level initially, then we open up the door for our prior lows, and if we get below those lows right there, now we're talking about further selling pressure, which could take the price down to old lows going back to 2012, or this trend line coming in at 77.84. That is off of the low going back to 2008, low going back off of 2012. So the levels are outlined from a technical perspective, and they're pretty clear for me. Use those levels to define your risk and limit your risk. In between, wouldn't do anything. I'd wait for extremes, wait for the market to either break to the upside or the downside, and go with those breaks in one direction or another. I'm going to take a quick look at the hourly chart just to give you a closer look at a potential breakout to the top side. And I look at the hourly chart because I want to put a Fibonacci, I want to look at the Fibonacci of the move down from last week's high to last week's low. And the 50% of that move comes in at the 80.01 level. Remember, the 80.18 level is our 100-day moving average up there. So the 80.01 level is another key level to get above. If we get above the 50% retracement level, that means we're above the 200-hour moving average, that's the green line, the 100-hour moving average, that's the blue line, 38.2% retracement, old high going back a couple weeks ago, and the 50% retracement level. So move above the 80.01 level, and it gives you an early sign of bullishness here for the pair, with the 100-day moving average, the next target on the top side. Off of the hourly chart as well, you can get closer levels on the downside, which might be of interest to you. The low that we saw on Friday's trade around the 58 level, or I'm sorry, 38 level, and then we have this bottom side trend line, which currently comes in around the 79.23 level. That would be another target before we get to our low levels that we saw here and here on the downside. So there you have it. A look at the euro sterling. Good fortune with your trading. Again, if you like this video and want to see more of them, be sure you to hit subscribe on YouTube right here. And if you want more information about Forex trading, visit us at forexlive.com. Thank you very much. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.